Apple just outsourced Siri AI to Google Gemini, and the market faded the keynote. Plus more from the day that redefined what Apple actually is. Let's get into it. Apple's WWDC keynote made it official. Siri rebrands to Siri AI, ships as a standalone chatbot app, and runs under the hood on a custom Google Gemini model via a $1 billion a year licensing deal. AAPL traded up 3% intraday, then closed down 1.88%. Google also dipped 1.35%. The read is that the deal is capped revenue, not a structural search win. Here's the fade. Apple is now openly a distribution layer for frontier models, not a frontier model builder. Visual intelligence and personal context were both promised in 2024. The market read déjà vu, not breakthrough. The bear case. Apple has outsourced its AI brain to a competitor. If Gemini stumbles, Siri stumbles with it. The forward signal. Watch which iOS 27 launch partners default to Gemini versus Claude through the foundation model's socket. Covered next. Heavy Gemini default validates the $1 billion as a cheap win for Google. The platform story of WWDC. Anthropic shipped a Swift package implementing Apple's new LanguageModel protocol, turning foundation models into a provider-agnostic socket across iOS 27, macOS 27, iPadOS 27, watchOS 27, and visionOS 27. Developers prototype on Apple's on-device model, then route complex queries to Claude, Gemini, or OpenAI by changing one Swift package manager dependency. No rewrite of session logic. Xcode 27 ships all three as out-of-the-box coding integrations. This formalizes Apple as a neutral marketplace, not a Gemini-exclusive shop, and it lifts Anthropic's distribution into the world's most lucrative consumer base. The bear case for Google. That $1 billion Siri deal is exclusive to Siri itself, not to the wider iOS app ecosystem. The forward signal, which launch partners default to which provider over the next 60 days, will set the narrative for who owns the new core AI socket. If Anthropic captures over a third, Apple becomes the largest enterprise-grade GTM channel Claude has ever had. Tim Cook closed WWDC with a short personal goodbye, confirming this was his final keynote before the September burst handoff to John TERNUS, the 50-year-old SVP of hardware engineering. Cook becomes executive chairman. TERNUS joins the board the same day he takes the CEO chair. The succession was pre-announced April 20th, so Wall Street had largely de-risked the transition. Monday's AAPL fade was about product strategy, not the CEO change. Here's why the pairing matters. The next 15-year Apple is being defined right now by a hardware-first CEO inheriting a software and AI strategy built on partner dependence. The bear case. TERNUS is a hardware operator stepping into an era where Apple's competitive position has shifted from chips to models, exactly the gap that played out on stage yesterday. The forward signal. Watch his first M&A move or org chart after September 1st. If he brings frontier models in-house, the Gemini contract is a stopgap. If he doubles down on partnerships, the marketplace thesis hardens. Chips rebounded sharply Monday after NVIDIA announced a co-development partnership with SK Hynix for next-generation memory, coming right after last week's $1.4 trillion semiconductor sell-off. NVDA climbed 2.3% pre-market. Marvell led the rally up 9%. Micron added 7. Corning spiked 9 on a separate multi-billion-dollar fiber optic deal with Amazon. Here's the read. The SK Hynix Pact is NVIDIA's second formal HBM4 era partnership after Micron, locking in the top 2 memory suppliers. Investor leadership is rotating from generic compute into memory plus custom silicon as the AI CapEx cycle matures. The bear case. This rebound is sentiment, not a fundamentals reset. The next inflation print or hyperscaler CapEx revision can reverse it within a session. The forward signal. Watch Samsung. They've committed a 22% CapEx hike for 2026, but are still chasing HBM4 qualification. A Samsung win flips the memory race wide open. A miss cements SK Hynix and Micron as NVIDIA's only options. UK startup PhysicsX closed a $300 million Series C at a $2.4 billion valuation, oversubscribed, led by Temasek, with new investors M&G Investments and Intrepid Growth. NVIDIA, Siemens, and Applied Materials all reinvested. The company claims doubled revenue year over year, tripled bookings, and more than doubled customer count. The pitch: large physics models, pre-trained foundation models for engineering simulation. Same scaling laws, playbook OpenAI used for language, now aimed at manufacturing. Here's why this matters. Second major industrial AI deal in 5 days, after Generalist AI's $400 million round on June 4th. VCs are rotating capital from agentic software into physical and industrial AI. The bear case. Physics simulation has long sales cycles and entrenched incumbents like Ansys and Siemens itself. A $2.4 billion valuation prices the company for category leadership before category proof. The forward signal: watch which Tier 1 automotive or aerospace OEM announces a PhysicsX deployment first. Real revenue beats vibes. The through line today. Apple is now a marketplace, NVIDIA is now memory dependent, and capital is rotating into industrial AI. 3 structural shifts, 1 keynote day, and the bears just got their first real batch of WWDC evidence. If you want this read at go every morning before the bell, subscribe. I'm Ted. This was the Daily Alpha.